You see, most traders think success is about finding the right strategy, the perfect setup, or the next market secret. But the truth is, the secret is hidden in something so ordinary, so simple, that most people ignore it. That secret is patience. Patience is not passive. It's not sitting idle, waiting for something magical to happen. Patience is active self-control. It's the invisible muscle that separates those who chase the market from those who attract success naturally. Every losing trader I've ever met had one thing in common: they couldn't wait. They couldn't wait for confirmation. They couldn't wait for clarity. They couldn't wait for the trade to unfold on its own time. They wanted results now. And that impatience wasn't about the market. It was about their relationship with uncertainty. You see, trading is not a battle against the market. It's a battle within your own mind. The market doesn't know who you are. It doesn't care. But your impatience, your emotional need to make something happen, creates the very chaos you're trying to avoid. When you learn to master patience, you stop trying to control the outcome. You start aligning yourself with probability. You begin to understand that not every candle is a call to action, not every price movement is a signal, and not every moment requires your interference. Patience is the art of letting your edge work without your ego interrupting it. Imagine this: you've done your analysis, you've identified your setup, and you know your risk. But then the market stalls. It doesn't move. That's when most traders fall apart. They second guess, they tweak, they overtrade. Why? Because they can't handle stillness. The silence between trades becomes unbearable. But the professional, he waits. He doesn't need the market to move to feel in control. He understands that his job is not to make the market move. It's to wait for the right opportunity where the probabilities align. Patience is not waiting for something to happen. It's trusting that what you've prepared for will happen, and that it doesn't need to happen now. Every tick of the market is a test of your inner equilibrium. Can you remain centered when there's nothing to do? Can you sit calmly while uncertainty tempts you with the illusion of control? That's where mastery begins. The impatient trader forces trades out of fear. Fear of missing out, fear of losing, fear of not being in control. The patient trader acts from trust in his edge, trust in the probabilities, trust in himself. The irony is, the moment you stop chasing the trade, the market starts coming to you. Opportunities appear more clearly because your perception is no longer clouded by emotional noise. Patience clears the fog. It allows you to see the market as it truly is, not as your fears or hopes want it to be. When you stop demanding outcomes, you start receiving them. That's the paradox of trading mastery. Patience isn't just about waiting. It's about alignment. It's the bridge between your knowledge and your results. It's what turns potential into consistency. Remember, the market will always test your need to act. Every hesitation, every sideways move, every false breakout is designed to pull you into emotional reaction. But patience, true patience, is the refusal to let that reaction define your behavior. When you reach that state, you no longer trade from fear or frustration. You trade from clarity. You trade from power. And that's when the magic happens, when your patience becomes profit and your discipline becomes your edge. The hidden key to mastering trading patience is realizing that you don't need the market to give you anything. You only need to stop taking action from the wrong place, emotion. Because once you master yourself, you've already mastered the market. Every trader believes they understand patience until the market begins to test it. Until you've sat through the silence of a sideways chart. Until you've felt the weight of watching opportunity slip by, you haven't truly met patience. Because patience in trading isn't simply about waiting, it's emotional control in motion. It's your ability to stay mentally and emotionally balanced while the market tries to pull you into reaction, into chaos, into fear. The most successful traders aren't the ones who analyze the most data or predict the most moves. They are the ones who can remain calm in uncertainty. They have mastered the one skill that most people overlook: emotional control. You see, trading is not about controlling the market. It's about controlling yourself while the market does what it does. That's the foundation of patience. When you first enter trading, you think action equals progress. You feel that if you're not in a trade, you're missing out. The screen becomes your stage, and every flicker of price becomes a call to move, to act, to do something. But that mindset is a trap, because the more you chase, the more you lose. The market rewards discipline, not desperation. It rewards stillness, not speed. Patience is not about doing nothing. It's about having the inner strength to do only what's necessary and nothing more. Patience begins with awareness. You must recognize that your emotions, fear, greed, frustration, excitement, are constantly in motion. They want to move you. They want to pull you away from logic and into impulsive action. The untrained trader reacts. The disciplined trader observes. You can't stop emotions from arising, but you can choose how you respond. That's emotional control. Think about it. Every trade you take is a reflection of your emotional state. When you act from fear, you cut your winners short. When you act from greed, you hold your losers too long. When you act from impatience, you take trades that don't align with your plan. The market mirrors you. It shows you your internal patterns. And until you learn to master those emotions, the market will continue to expose them. Patience is the ability to stay present without needing to fix what isn't broken. Most traders can't handle inactivity. They equate stillness with stagnation. But in trading, stillness is strength. The moment you learn to be comfortable doing nothing when nothing should be done, you've crossed a major threshold. Because the truth is, patience isn't passive, it's active self-control. It's a deliberate choice to trust your edge instead of your impulses. Imagine a sniper preparing for a perfect shot. He doesn't fire at every sound or every movement. He waits for alignment, for the target, the wind, the breath, and the timing to synchronize. That's patience. The sniper's power doesn't come from firing bullets, it comes from knowing when not to. A trader must develop the same mentality. Every trade isn't worth taking. Every setup isn't your opportunity. The market will offer you endless distractions, but your edge only appears in moments of alignment, and that alignment only becomes visible to the patient mind. Patience requires faith, not blind hope, but trust in your process. When you've tested your strategy, when you understand probabilities, you must step back and let those probabilities play out. You can't force the market to deliver results on your timeline. If you do, you're no longer trading your plan, you're trading your emotions. The difference between a disciplined trader and an impulsive one is that the disciplined trader doesn't need the market to move to feel in control. His sense of power comes from following his rules, not from instant gratification. But let's be honest, it's not easy. Waiting challenges the deepest parts of your psychology. When you wait, you confront uncertainty. You face the fear of missing out, the fear of losing control, the fear of not being enough. You begin to question your analysis, your timing, even your worth as a trader. These thoughts create pressure, and that pressure seeks release through action. But action taken from emotional pressure is rarely aligned with logic. Patience, therefore, becomes your tool to release that pressure not through action, but through awareness. Every moment you choose not to react emotionally, you strengthen your internal foundation. You're training yourself to stay centered amid chaos. And over time, that becomes your greatest edge, not a technical indicator, not a secret system, but the calm certainty that you can wait for the right moment without forcing it. Trading success is built on delayed gratification. You must be willing to trade short-term discomfort for long-term consistency. Impatience is emotional immaturity. It wants comfort now. It wants the dopamine hit of taking a trade, the thrill of being right, the validation of action. But real mastery comes when you're no longer seduced by the need to be active. When your satisfaction comes not from trading often, but from trading correctly. Patience allows you to detach from outcomes. Once you enter a trade, you've already done your job. The market will do what it wants to do. If you interfere, if you close too early, if you add impulsively, if you chase, you're trying to control the uncontrollable. Patience, in this sense, is a form of surrender. But it's not weakness, it's power. Because you're no longer reacting to fear or greed, you're responding to probabilities. Many traders talk about letting winners run and cutting losers short, but few can actually do it. Why? Because both require patience. Letting a winner run means resisting the urge to grab quick profits. Cutting a loser short means resisting the hope that it will turn around. Both require emotional control. You can only execute them consistently when you've trained yourself to act independently of emotion. Emotional control in motion means that even when your heart races, even when your screen flashes red or green, your decisions remain grounded in logic. You observe your emotions, but you don't identify with them. You feel fear, but you don't let it guide you. You feel excitement, but you don't let it drive you. That's true patience, not absence of emotion, but mastery over it. And the irony is this: when you stop chasing results, results begin to come. When you stop trying to control every outcome, the market begins to move in your favor more often. Why? Because your actions are now aligned with probability, not emotion. You're finally trading from a place of calm objectivity. Patience also creates mental clarity. The mind that's in a rush is foggy. It sees patterns where there are none. It fabricates urgency. But the patient mind is still, observant, and sharp. It sees the truth of the market rather than the reflection of its own emotions. That's why some traders can sit through the same chart and see opportunity where others see chaos. Their perception isn't clouded by emotional noise. To master patience, you must first redefine what progress means. Progress isn't measured by the number of trades you take, but by the quality of decisions you make. Some of the best days in trading are the ones where you didn't take a single trade, because you respected your plan and didn't let emotion dictate your behavior. Patience rewards discipline with long-term growth, while impatience punishes recklessness with short-term regret. The market is the greatest mirror you'll ever face. It reflects every emotional weakness back to you in real time. Every moment of fear, greed, doubt, or hesitation gets magnified through your trades. That's why patience isn't optional, it's essential. It's the emotional shield that protects you from your own mind. When you reach that level of control, trading becomes simple. Not easy, but simple. You no longer need to predict or force. You simply observe a line and act when the time is right. You stop feeling the need to prove yourself to the market because you understand the truth: the market doesn't care about you. It's not against you or for you, it just is. Your only job is to remain in harmony with it, and patience is what keeps you there. Patience teaches you humility. It reminds you that you can't bend the market to your will. It humbles your ego and refines your discipline. It teaches you to respect timing. Not your timing, but the market's timing. It turns frustration into focus and impulse into insight. Every professional trader you admire has one thing in common: emotional stability. They've learned to remain composed no matter what happens. They understand that consistency isn't built on constant action. It's built on consistent mindset. And that mindset is a byproduct of patience practiced over time. So if you truly want to grow as a trader, stop asking, "When will I win?" and start asking, "Can I wait?" Because the moment you can wait without anxiety, without doubt, without forcing, that's the moment you've already won. Patience is emotional control in motion. It's the quiet strength that allows you to move through chaos without becoming part of it. It's the difference between reacting and responding, between chasing and attracting, between trading randomly and trading with precision. In the end, trading mastery doesn't come from knowing more. It comes from feeling less. Not in a cold or detached way, but in a way that keeps emotion from blinding clarity. That's what patience gives you: clarity under pressure, balance under uncertainty, and control under volatility. When you master that, you stop being a participant in the market's noise and start becoming the calm center within it. You stop fighting time and start flowing with it. That's where the real power lies, not in prediction, not in control, but in patience. Every trader starts their journey with the same belief: if they can just find the right strategy, they'll finally succeed. They spend hours studying charts, testing indicators, refining setups, and watching videos that promise to reveal the secret. But what they fail to realize is that the market doesn't care how smart their strategy is. The market doesn't reward intelligence. It rewards readiness. The market isn't testing your technical knowledge, it's testing you. You see, the strategy is never the problem. The problem is the trader behind it. Every system ever created works for someone and fails for someone else. Why? Because success in trading isn't about the system you follow. It's about your ability to execute that system consistently under emotional pressure. And that's what the market is constantly testing. The market is the most honest teacher you'll ever meet. It doesn't lie, it doesn't flatter, and it doesn't care about your potential. It reflects your current state of mind, your fears, your doubts, your impatience, your need for control. Every tick, every candle, every loss is a mirror showing you who you really are when money and uncertainty collide. So, when the market moves against you, when you feel frustration building, or when you start breaking your own rules, that's not a test of your strategy. That's a test of your readiness. Are you emotionally equipped to handle uncertainty without reacting to it? Are you disciplined enough to let probabilities play out without interference? Are you mentally stable enough to follow your plan even when every part of you wants to do the opposite? Because that's the real game. That's what separates professionals from amateurs. The professional trader doesn't need the market to behave perfectly. They just need to behave perfectly within the market. Their readiness comes from understanding that the outcome of any single trade doesn't matter. They've accepted that losing is part of winning. They've trained their mind to operate in alignment with probability, not emotion. The average trader believes that losing trades mean they need a new strategy. But the truth is, they need a new mindset. The market will always find a way to expose the weak spots in your psychology. If you can't handle waiting, it will make you wait longer. If you can't handle losses, it will show you losses. If you can't handle uncertainty, it will give you more of it. The market is like a mirror reflecting your level of emotional maturity. You can't hide from it. You can't cheat it. You can't trick it with intellect. The market knows exactly who's ready and who's not. Readiness means you've reached a level of emotional detachment where you no longer seek to control the market. You seek to control yourself. Think about this. Every losing streak you've had wasn't just about poor setups. It was about poor self-control. You knew what you should have done, but you couldn't do it. That gap between knowledge and action, that's what the market tests. You don't fail because you don't know enough. You fail because you can't stay aligned with what you already know when pressure rises. It's not the strategy that breaks under pressure. It's the trader. You could give the best strategy in the world to 10 people, and only one might succeed. That one person isn't smarter. They're steadier. They're ready. They understand that trading is 80% psychology and 20% technique. The mind drives the result. The method is just the vehicle. The market doesn't test your setups. It tests your patience to wait for them. It tests your discipline to execute them without hesitation. It tests your trust to let them play out without interference. Every move the market makes is an invitation to prove your readiness, or your lack of it. You can tell when a trader isn't ready. They overtrade. They chase entries. They move their stop losses. They take profits too early. They talk about gut feelings and intuition, when what they really mean is emotional reaction. Readiness isn't about being emotionless. It's about emotional control. It's about having emotions and still choosing discipline. Imagine you're a pilot. You've trained for years. You've studied every instrument and every emergency procedure. But once you're in the air and turbulence hits, knowledge alone won't keep you calm. Readiness will. The same applies to trading. The charts are your instruments, but your emotions are the turbulence. When volatility hits, can you stay calm enough to trust your training? That's the difference between knowing what to do and being ready to do it. Readiness is built through repetition. You can't read your way into it. You have to experience it. You have to feel the frustration of missing trades and learn not to chase. You have to feel the sting of losses and learn not to revenge trade. You have to feel the temptation of early profits and learn not to grab them out of fear. Each emotional challenge is part of your preparation. The market will keep sending you the same lesson until you finally learn it. If you're constantly losing, don't ask, "What's wrong with my strategy?" Ask, "What part of me isn't ready yet?" That question will change everything. It shifts your focus from the external to the internal, from trying to fix the market to trying to fix yourself. Readiness also means accepting uncertainty as the natural environment of trading. You will never know what will happen next, but you can always know how you will respond. That's where your power lies, not in prediction, but in preparation. The market doesn't reward those who guess right, it rewards those who act right. When you're ready, losing no longer shakes you. You see it as feedback, not failure. You don't need to react, you just adjust. You don't feel the urge to double down to make back losses. You simply wait for the next setup. Readiness turns every experience, win or lose, into a lesson that strengthens you. The market's job is to expose weaknesses, not to flatter strengths. That's why it's such a perfect teacher. It will show you exactly where you lack emotional balance. When you're not ready, you'll feel frustration, fear, or anger every time the market moves against you. When you are ready, you'll feel calm curiosity. You'll watch, adapt, and act according to plan, not emotion. Most traders think the goal is to control the market. The real goal is to control your responses to it. Readiness means you've accepted that you are the only variable you can manage. The market doesn't change. It simply reflects your state of being. This is why two traders can look at the same chart and see two completely different things. One sees chaos, the other sees rhythm. One feels fear, the other feels opportunity. The difference isn't the market, it's readiness. You can spend years looking for the perfect system, but until your mindset matches that system, it won't matter. You'll keep sabotaging yourself. You'll keep doubting your edge. You'll keep overtrading or undertrading. All because your emotional foundation isn't stable enough to execute consistently. The market doesn't punish you because it's cruel. It teaches you because it's neutral. It gives you exactly what your mindset attracts. If you're impulsive, it gives you volatility. If you're fearful, it gives you hesitation. If you're patient, it gives you clarity. Readiness is when you can stand in front of that uncertainty and feel no need to force anything. You're not waiting for the market to move. You're waiting for yourself to align. When you act from that space, every decision carries power because it's no longer rooted in reaction. You begin to realize that trading is not about beating the market. It's about synchronizing with it. The more emotionally reactive you are, the more out of sync you become. The more calm and focused you are, the more aligned you get. Readiness is the bridge between understanding and execution, between knowing and doing, between potential and performance. To be ready means to be detached from outcome. You understand that losses don't define you, they're just data. Wins don't inflate you, they're just results. You stop riding the emotional roller coaster because you've built inner stability. That's readiness. The market will continue to test you until it no longer needs to. Once you've mastered your emotional responses, the tests stop feeling like punishment. They start feeling like proof. Proof that you're growing, proof that you're stronger, proof that you're ready for more. In every moment of frustration or doubt, remember this: the market is not against you, it's preparing you. Every setback is shaping you into a trader capable of consistency. Every emotional struggle is a lesson in readiness. When you finally understand that the market isn't testing your strategy, it's testing your state, you begin to trade from a place of peace. You stop chasing perfection and start pursuing balance. You stop searching for new systems and start strengthening the one within yourself. That's when trading becomes effortless. Not because the market gets easier, but because you do. You no longer fight against the flow, you move with it. You trust your edge, you trust your discipline, and most importantly, you trust yourself. The market will always test you. But when you're truly ready, emotionally, mentally, and spiritually, those tests no longer shake you. They reveal your mastery. And that's when you realize the truth that every professional trader eventually learns: the market never rewards knowledge, it rewards readiness. Confidence is one of the most misunderstood elements in trading. Everyone wants to feel confident. Every trader wants to believe that confidence equals mastery. But here's the truth most people never understand: confidence without control is the fastest road to chaos. Because confidence, when not anchored by emotional discipline, turns into arrogance, and arrogance in the market is fatal. You see, there's a fine line between belief in your edge and the illusion of control. Many traders cross that line without realizing it. They mistake a winning streak for skill. They confuse temporary success for long-term stability, and they begin to believe they can control the market. But the moment you believe you can control the market, you've already lost control of yourself. Confidence alone can make you feel powerful. It gives you the courage to act, to take trades, to trust your analysis. But that same confidence, when unbalanced, can blind you to risk. It can make you feel untouchable. It can push you to take trades that your plan doesn't justify, to increase your position size beyond reason, to hold on to losing trades because you're sure it will turn around. That's not confidence. It's emotional intoxication. The professional trader understands that confidence is not about knowing what will happen. It's about knowing how you will respond no matter what happens. It's the ability to stay calm, consistent, and disciplined whether you win or lose. Confidence without emotional control is like giving a high-performance car to someone who's never learned to drive. It's only a matter of time before they crash. Real confidence comes from control over your reactions, your impulses, your expectations. Without that, your confidence will betray you. It will push you to force trades, to chase setups, to ignore your stops. You'll start believing you're right instead of staying focused on what's probable, and that's the beginning of chaos. The truth is, every trader feels confident after a winning streak. It's easy to feel strong when the market validates you. But that's not real confidence. It's conditional confidence. It only exists when things are going your way. The moment you hit a few losses, that confidence vanishes because it wasn't built on discipline, it was built on outcomes. Control, on the other hand, doesn't depend on outcomes. It's internal. It's the quiet strength that allows you to follow your plan regardless of what the market does. It's the foundation of true confidence, the kind that doesn't shake when volatility hits. When you have control, you don't need to prove anything. You don't need to be right, you just need to execute your edge. The trader who lacks control is like a gambler who believes in luck. They win, they feel invincible. They lose, they spiral into revenge trading. Every emotional swing becomes amplified. Their confidence rises and falls with every trade because it's tied to results, not to process. But the trader who has control, real control, understands that confidence is not an emotion, it's a state of inner alignment. It's the outcome of preparation and patience. It's knowing that you don't need to win every trade to be successful. It's accepting uncertainty without losing composure. That kind of confidence is unshakable because it's rooted in self-trust, not ego. The moment you lose control, confidence becomes dangerous. It feeds your ego instead of your discipline. You start believing that you can predict every move, that the market will bend to your analysis. You take risks that don't make sense because you feel invincible. And that's when the market reminds you who's in charge. The market has a way of humbling overconfidence. It doesn't punish you for being wrong, it punishes you for being careless. And carelessness always begins with overconfidence. Every major trading collapse begins with the same story: a trader who thought they couldn't lose, who abandoned their plan, who doubled down on emotion instead of managing risk. Control keeps confidence grounded. It reminds you that you are not the market. You are a participant in probabilities. You can influence your process, but you cannot dictate the outcome. When you understand that, your confidence becomes realistic. You stop trying to control the uncontrollable and focus on what you can control: your behavior, your execution, your response. Confidence without control is like flying through a storm with no instruments. You might feel brave, but bravery doesn't protect you from crashing. Control gives structure to confidence. It transforms belief into discipline. It keeps your actions aligned with logic instead of emotion. Think about the times you lost big, the times when everything seemed to spiral out of control. If you look closely, it probably didn't start with a bad strategy. It started with overconfidence, a feeling that you could bend the rules just this once, a belief that you knew what the market would do next. That's how chaos begins. Not suddenly, but through small acts of emotional surrender disguised as confidence. Control is built through awareness. You must learn to notice the subtle signs of emotional takeover: the racing heartbeat, the impulse to get back at the market, the urge to increase size after a loss. These are not signs of confidence, they're signs of instability. And if you don't catch them early, they will lead you straight into chaos. Confidence tells you, you've got this. Control tells you, stay calm and follow the plan. Together, they create mastery. Separately, confidence without control creates disaster. When you are in control, you understand that the market doesn't owe you anything. You stop expecting it to behave according to your beliefs. You stop trying to force outcomes. You become adaptable, patient responsive, not reactive. That's when confidence transforms from emotion into strength. The untrained trader uses confidence as a weapon against uncertainty. The professional uses control as a shield against emotion. The untrained trader reacts, the professional responds. The untrained trader seeks excitement, the professional seeks consistency. Confidence without control is reactive energy. It's built on emotion, not structure. It leads to impulsive trading, revenge trades, and burnout. But when you have control, you turn confidence into a tool for execution, not ego. The irony is, control doesn't kill confidence, it amplifies it. When you know you can manage your emotions, you stop fearing losses. You stop needing to be right. You stop doubting yourself every time the market moves against you. You trust your process, you trust your edge, and you trust that long-term consistency will take care of everything else. That's real confidence. The kind that doesn't depend on the market, the kind that doesn't crumble under pressure, the kind that grows stronger with every experience. But developing that balance takes awareness and humility. You must be willing to challenge your ego. You must accept that you can't always be right. You must remind yourself that trading isn't about being perfect. It's about being consistent. And consistency comes from control, not from emotional highs. Confidence without control is seductive. It feels good. It feels powerful. But it's a trap. It gives you a false sense of mastery right before the fall. Every time you act without control, you reinforce chaos. Every time you let confidence override discipline, you strengthen your attachment to outcomes. And that attachment is the root of suffering in trading. Control, on the other hand, is quiet. It doesn't scream for attention. It doesn't chase results. It simply shows up day after day, guiding your decisions through stability. It doesn't need excitement. It finds power in precision. The trader who learns to balance confidence with control becomes untouchable. Not because they never lose, but because losses no longer shake their foundation. They see every outcome as feedback, not judgment. They don't seek validation from results. They find fulfillment in execution. This level of mastery transforms your entire relationship with trading. The emotional roller coaster stops. The highs and lows even out. You stop overanalyzing and overreacting. You begin to operate from flow, a state where confidence and control move together in harmony. You become confident enough to act when it's time and controlled enough to wait when it's not. You stop fighting the market and start dancing with it. Every move becomes intentional, every trade becomes precise. And here's the ultimate truth: you don't lose money because you lack confidence. You lose money because your confidence isn't contained. Control is what keeps your confidence from destroying you. Control is what transforms random trading into professional execution. The market will always expose false confidence. It will always humble those who rely on emotion instead of discipline. But it will reward those who remain steady, those who understand that confidence means nothing without control. So, the next time you feel unstoppable, check yourself. Ask, am I confident or am I reckless? When you feel the urge to break your rules, ask, am I in control or am I chasing? Because in trading, chaos doesn't come from the market. It comes from within. And the only way to silence that chaos is to merge confidence with control. Confidence without control leads to chaos. But confidence with control, that leads to freedom. The kind of freedom that comes from knowing that no matter what the market does, you'll remain grounded, disciplined, and consistent. And in the end, that's the only kind of confidence that lasts. In the end, the market doesn't reward boldness without balance. It rewards the trader who pairs confidence with control, belief with discipline, and courage with restraint. Confidence gives you the strength to act, but control ensures that your actions serve your edge, not your emotions. When those two forces work together, chaos turns into clarity, randomness becomes rhythm, and trading transforms from a struggle into a flow. Mastering this balance is the true mark of a professional. Because in the market, as in life, confidence without control destroys, but confidence with control creates lasting freedom and consistent success.